Hello everybody, very good morning to you all and welcome back to another live stream here at Taurex and Atmos. I hope everyone is doing well and trying to make sense of everything that's going on in the last sort of 24 hours or so. It's been it's been carnage, to be honest. It's been very, very difficult conditions to navigate with these higher periods of volatility, and that's why it's my job to come on and try and break that down and try and analyse things from more of a clear head, and we'll try and do that today. In today's live stream, a few really good things that have been posted as well by some of the members of the community. So thank you for that. Some things about the correlation. I saw that the correlation between if that was you, Tree, the correlation between Bitcoin and gold is now negatively correlated, and that correlation began when Donald Trump's inauguration on Monday, the 20th of January, which is very, very interesting. And also, Jack putting in the thing about the Fed and Trump, and things I think are very quite uncertain and quite unpredictable and quite difficult really to try and predict. So we'll also break down some of the live trades, and believe it or not, we have got data coming out, although it doesn't really seem that important at the moment with obviously everything that's going on with Trump, etc. So difficult markets, but also the volatility can present some really great opportunities, and hopefully we can break some of those down for today. So first of all, let's start by having a look at what is sort of going on. We don't really need to go into the massive details on it. We're seeing now a lot of tit for tat, really. Obviously we've got Trump announcing tariffs, implementing tariffs, and then we've got retaliations from the countries that he's implementing those tariffs on. No real surprise. As I said before, that's not good for risk assets on the whole. It's not good for risk sentiment. It's not good for global trade. There isn't really anyone who really wins in this situation, because each country will rely on another country for a particular thing, and all that's going to happen is that eventually trade is going to be continuously stopped. It's going to be come to a halt at some point. So the thing I wanted to take from here, obviously the fact that he said he didn't want to make the tariffs on April the 1st because he didn't want to be accused of April Fool's Day, which basically him saying I didn't want anyone to think I'm not going to do this because I am, which was very Trump-like. And this was the bit that I was slightly more concerned about, was here where it says whatever they tax us, we will tax them. So the retaliations that are coming back from the US tariffs onto everyone else, the ones that are coming back, he's going to bring more back to them. So you just get this like constant confusion basically, and this constant chaos and this constant carnage. So it makes it very difficult to predict. My overall opinion, and I want to leave it there on that, because you can get into all the details of each individual tariff if you want to, and I'm around in the Discord channel if anyone wants me to do that, then pop up and I will. But overall, I would say that I actually think, in my opinion, because this isn't necessarily good for anyone, I don't see this lasting too long. Okay, which means that I think the volatility and the fall we're seeing in a lot of the risk assets, I think is a little bit, I think will be short-lived, and I think that might be why we're seeing the dollar down, because I'm not sure if the markets truly believe this is something that is going to last. Because what's the benefit of it lasting? I'm not quite sure what that is. Hello to you, Curtin, by the way. Good to see you. Hope you're doing well. I don't see any benefit to this continuing. Therefore, when you look at the dollar trades I had yesterday, and full disclosure, they didn't do very well. The dollar wasn't kind to me at all, to be honest with you, and I have no regrets about taking the trades. I quite like this area that we saw. Probably could argue that we didn't quite get the reaction from the 61.8. This is on dollar Swiss franc. I spread my risk out across dollar Swiss and NZD USD. And to be honest, it's just one of those situations. And this was my NZD USD trade. Got into a little bit of profit. It was a trend rider trade. They don't always come through. They don't always play out. And it's never nice to take a loss, but Doesn't bother me at all. I was really happy. I was actually, not that it matters now because we've blasted straight through the level, but I was quite happy with the fact that we saw, an initial reaction from this demand zone. We had that bullish divergence as well, and we had a break of structure. I would have always taken those trades. 10 times out of 10, I would have taken those trades. Sometimes it doesn't work out for you, and you have to take that on the chin and move on. So what I want to do is, for full transparency, just in case people don't think that I actually document my winners or losers, I document both. So my exit price for these was, let's call it 89. And for NZD USD it was 0.56611 roughly. And I took a 1% loss on both. Not the ideal entry, but I would say that in the lessons it was one of those things that, happy with DXY analysis, just did not work out. And I'd put that in for both, just to note that, normally as traders, sometimes when you see that, you can lose your head a little bit, right? You can say like, oh no, and you can start to go and chase the markets, but it didn't work out for us, or for me, so I say, and we move on. We move on to the next opportunity, and then that's the way it is. February started very much the same, actually, and still managed to turn some of it around. So that's the start to March that we've got. I'm going to copy that actually into my into my 2025 trades. There we go, and that should, there we go, perfect. So that's updated my P&L for March, currently minus 2%, minus plus 1% in February, and plus 10% in January. So not a bad start to the year, really. Okay, so just check there was no questions. Okay, cool. Looking at the current opportunities that we can look at now, one of the ones that I'm taking a look at, it plays into a little bit, because I want to see this dollar index. I just want to double check what we're seeing is the true. Haven't got much. We've got much divergence here. We've still got like really strong divergence. Can you see that down there? Which is tempting, to be fair. So unfortunately, I think the only evidence we could really provide to that is this. But my issue with it is, if I'm right in saying that these Trump tariffs, liquidity, it's a key liquidity area. See how we react from that low today. If we're right in the fact that we think potentially that this won't last too long, I think the dollar could potentially continue to see some downside. However, it's very important what we see from and what we now hear from the Federal Reserve after this, because I think if they come out and maintain a really, really hawkish view off the back of all of this, then it points to some more dollar strength. If they come out and they're now a little bit more defensive because the concern that this may have on the US economy, and actually turn a little bit more dovish as a result, that could be the catalyst for some more dollar weakness. So I want to sit on the fence on that one a little bit. The trade that I really want to try and benefit from is something like an S&P 500 or a NASDAQ trade. So I was looking at the S&P 500 today, and I noticed that we've got this move yesterday. Do you notice how we took the liquidity on this downside into this area of support, And I wanted to actually add on to that because I heard about this. Why can't I find indicators anymore? Moving average. Ugh, can't have enough indicators on there. That's annoying. I'll just delete this one for now. I wanted to show you 200-day moving average. Look at that. Can you see that? I'll actually, I'll make this a little bit bigger and I'll put it in a different colour. That is the 200-day moving average, and that is a really nice reaction from it. So when you think about the confluences here, you've got three. You've got liquidity grab, you've got demand zone reaction, and a 200-day moving average reaction, which the 200-day moving average is used quite a lot. So I think it's quite a good area of support. So we've had the initial reaction, and now it's about, okay, where's the potential evidence that we could see some upside as a result of that? Well, if you look here, potentially you could shape up something. It's not the strongest triangle pattern really, is it, to be honest? Probably not that. Thing is, I'm tempted to play it. I don't know how. You could play it like this. Still a 3-1. 4-1 if you targeted the all-time highs. What do we think? That's an interesting one, right? Or maybe the best way. That's probably a bit of a crazy target considering the current environment we're in. You'd be in that. That's more of a swing trade. 3-1 if you want to target that FVG. That's not bad. You might want to wait for something on a lower time frame, maybe. It's a bit of a mess at the moment because we're not in the US session. So let's wait. I'm going to wait and I'm going to update, because what I want to see is I want to see a bit of a breakout and a retest into some sort of order block. So maybe I have to wait on the 1 hour time frame for a breakout of this consolidation first, look for a retest, then go higher, and I can probably increase my risk reward. But that's the sort of trade that I think might be good. It looks much better than this is the NASDAQ. But again, look, another market which is trading and reacted twice from its 200-day moving average. The US 30 remains considerably above it, so it's not really a good area of support, I would say. So there's two ways you can say this. You could say, is it worth the risk to try and play off the support of that 200-day moving average? I think probably it is. But at the same time, I would say that these markets are in a very dangerous area, because I think if that breaks on the NASDAQ and that breaks on the S&P 500, if those two levels break, I think we could be in for a period of extended downside. Because look, the last time we had the market really trading below its 200-day moving average was back in 2022, and we actually saw a bearish year overall. You can get some. You had this, which was a threat potentially, 2023. But overall, it's not often, as you can see, that Sorry, that's me doing some. It's not often that you see, especially on the Nasdaq, this market trade below its 200-day moving average. Again, when last time 2022. So I think that opens up it for me. That makes it worth the risk, if you see what I mean. And that's one of the main things I'd like to play. So I've I've sort of half given up on this whole dollar strength story just for now. I think I'd rather play. Um, I think I'd rather play the upside to the stock market because of the fact we're at such key support areas. If they break and you're wrong, then at least you know, and at least you know potentially we're in for a period of bearishness. But I think we're at that last bit of support that could be coming in. Okay, good stuff. Right, we're on Wednesday now, and we've heard from Trump, and we've also got it is Wednesday, isn't it? We've got the ADP employment changes and the ISM services PMI out later today. To be honest with you, I think the markets are going to be trying to just digest everything that's going on with tariffs, which I think puts into question how important some of this high impact data is. Obviously, it is important. I'll keep an eye on it. If there's anything like of note, then I will make sure I update both the Discord channels accordingly. But unfortunately, we're at that weird stage where like there's something external coming in, and it's sort of all about that, and it makes the market sometimes quite tricky. And it's no surprise really that I took 2 losses there as a result of that, because the price action hasn't been as clean. That's not me making excuses, by the way. It's just the way it goes. Okay, I think that just about sums it up for today then. So not quite saw the dollar strength that I thought. Okay, we park it, we move it, we wait for NFP on Friday and we wait for the Federal Reserve to see if we will get that dollar strength coming in. I'm still tempted by it, but I think some of the best plays that have got the higher confluences coming to some of these, the S&P 500 and the Nasdaq. So we shall see how they go. It's going to be fascinating to see if we do get a close below that 200-day moving average. We could be in for a few months of downside for sure. Okay, good stuff. Thank you very much to those who tuned in this morning. Do trade well, do trade safe, take care, and yeah, I'll see you soon. Thank you very much.